Time now for business news with Ari Rabinovitch. Hello, Ari.
Hello, Cynthia.
Okay, let's start with the big biz story of the day. The Bank of Canada delivered a jumbo-size interest rate cut. You can say I told you so. I'll let you gloat.
It's me and like every other financer out there, with the exception of a few. But yeah, the majority of us, yeah, we told you so.
Yeah, you did. This is big news.
Yeah, it should come as good news, especially for mortgage holders, those with variable rate mortgages, and also for those who are about to apply for a loan, like a mortgage or maybe a car loan, something of that nature, that the benchmark lending rate, that's the lowest rate that banks can lend out at, has been dropped by 0.5% by the Bank of Canada. That's its fourth cut so far this year, and the last three rate cuts were by 0.25% each, so this is the largest yet. It also is the same size as the one that the U.S. Federal Reserve did last month, although they operate independently and, two separate economies completely. But there is a sense that our central bank wants to get ahead of the curve, maybe play a little bit of catch up, because the last gauge on inflation that we saw, the consumer price index, fell to 1.6%, and the central bank's threshold is 2%. So they want to maybe try to get a hold of inflation before it gets out of their reach. Now, what they are shifting their focus away from is, according to Tiff Macklem, the central bank's governor, is that they want to get away from the idea of getting inflation under control and now trying to avoid too much of a rut in the labor market and also the economic growth potential overall, because our economy, Cynthia, is definitely slowing down significantly, and these high interest rates have a lot to do with it. And the real estate market, no doubt, could see a bounce back now that maybe it'll be a little more affordable to get into the market.
So they don't want to see a stagnation.
That's a good way to put it, for sure.
Okay, let's turn to Boeing. A tentative deal has been reached that could bring an end to a strike there, but this has been a costly period for Boeing, Ari.
Yeah, like before the strike happened, Boeing was already getting hit hard with a lot of quarterly losses, all really stemming back from, well, we'll get into that a little bit later. But what's happening with this strike, Cynthia, is interesting because it's been about a month that 33,000 machinists have been on picket lines, and they're seeking higher pay, amongst other things. But Boeing has actually come to the labor union with a new deal, and it gives them a pay raise of 35% over 4 years. The union has to vote to ratify this deal, and that is happening later tonight. So hopefully that strike can end for the company, because they just reported that they lost $6 billion last quarter.
Ouch.
Yeah, so it just keeps on getting worse and worse for Boeing. The stock is down about 40% so far this year, Cynthia. And it's all really stemming back from that door plug blowout incident on that Alaska Airlines flight back in January.
It's been a tough year for Boeing. Okay, the face of the media keeps changing, the landscape, and even politicians are turning now to podcasts to get their messages across.
Yeah, so this U.S. presidential election in mind, Cynthia, candidates are doing things a little bit differently. So we found out today that Donald Trump has agreed to go on the Joe Rogan Experience this Friday. That podcast is the #1 podcast worldwide, with about several billion monthly listeners and millions of regular subscribers. Now, Joe Rogan himself has been criticized as being maybe a far right-leaning person, but he himself has said that he doesn't really choose politics to really have an opinion about. But having Trump on the show definitely is going to be a landmark opportunity to maybe put some interesting questions towards the candidate that maybe the debates haven't been able to put forward.
Interesting. I'm sure a lot of people will be listening in. Ari, always great to talk to you. Thanks so very much. See you tomorrow.
Cynthia.
Okay.